All right, I am here with Paul. Thanks for being on with us, Paul. We're going to get right into it with this investor mandate interview to learn a little bit more about the cannabis companies that is currently investing in. Paul, if you could please introduce yourself, tell us where in the world you are, and a little bit about you.
Excellent. Well, thanks for having us on today, Andres. I'm Paul. I look after the mergers and acquisitions for recently became public, and our whole mandate is to consolidate profitable, smaller in particular, profitable cannabis enterprises. We're focused mainly at this point on three markets, being mature markets, being Colorado, Oregon, and Alberta, Canada. We're rolling up, there's a lot of smaller operators, about 1,500 in those three core markets of ours. And so we're doing a consolidation so that we can be one of the few profitable cannabis companies that are publicly traded. The other piece that we're doing is we're also consolidating or bringing into our fold some of the supply chain assets. So it also makes us a little bit unique. We have a lot of supply chain experience. Our team has over 100 years of cannabis experience, most of it being originated out of Colorado, but we fully understand vertical integration, been there, done that, and as well as understand the supply chain side from software to some of the other pieces within the supply chain.
Fantastic. Great. And can you let us know a little bit more? I mean, you told us right there what markets you're focused in.
So it's just the mature markets at this point. We find that the newer markets are, there's a lot of regulatory uncertainty, and it's literally the pattern happens over and over again. It takes 2 or 3 years in some cases, 4 years for a market to stabilize from a regulatory standpoint. So the entrepreneurs are constantly having to chase the regulators, which can be rather costly. So we're only interested in markets that are mature, or we have a comfort level of that there's a regulatory certainty into the future, and it's kind of stabilized the market. So that's what we're focused on, again, so that we know we have profitable assets. We're only interested in profitable assets in those particular markets. But again, right now we're very, very hyper-focused on the three, we'll call it our three founder markets.
Great. And what parameters do you look for in a cannabis company that you would bring into Unified Global?
Yeah, so it's got to be profitable. So we're looking at everything in the full supply chain. So everything from cultivation, obviously cultivation to retail. That's pretty much a standard multi-state operator, and we actually consider ourselves a Can-Am, being a Canadian American MSO or multi-state operator. So we're very focused again on just having profitable assets, but everything from dispensaries. It could be the delivery segment. It could include some of the manufacturing, all the way through to obviously the dispensaries at the retail sales point. We're also interested, as I said, in other supply chain pieces. So that could be anything from the nutrients for the farms to other pieces from packaging, software, and so forth within the supply chain.
All right. And what do you do if the asset is not profitable yet? What do you suggest, or what do you have to say?
Yeah, that's a good question. So we have to look at how close to profitability they are. We have other partners, other funds that we work with that are very focused on the startup portion or venture side of the business. We're kind of like a mini private equity company, publicly traded. So we're very focused on profitable assets. But so depending, on what the asset is and how close they are, or even if they're not close, we have other partners that are very much interested and keen on the venture side that we're happy to partner with. They like it because they know that after the asset gets profitable, we'll be the first ones in line to potentially want to acquire them.
Great. And so kind of open the door there. Obviously, you guys are looking for profitable entities, and there is kind of some room for you to communicate with non-profitable entities. But who should not be reaching out to you after this video, where it will kind of just be a waste of time to put their business in front of your eyes?
Yeah, I appreciate that question. We're always willing to help other entrepreneurs, especially in the cannabis space. We had a call the other day from somebody in a brand new state. They were brand new to it. And look, we have other opportunities. We have a franchise piece, for example. So even though they are just starting, we were able to point them and say, look, you don't need to go through all the problems and challenges that it usually happens We've all been through this multiple times now. So we have a whole list of providers that could assist them depending on the project. So, or like I say, it's a good time for them to even reach us saying, I want to, think I should do a grow and a dispensary and say, look, just, we'll help you. So we don't mind talking to those folks. It's just, it's not something we're going to acquire. So we're happy to start the relationships. And yes, it can be time consuming and it's more of a longer term relationship, but we're all about long-term relationships. So potentially they might want to buy one of our franchises for that particular state, for example. So I would say there's not anybody in particular that shouldn't call us. Somebody that's just got a harebrained idea, look, an email's fine. We'll always respond to the emails. And again, we have venture capital folks in the cannabis world that, that's their bailiwick, is to focus on the startup concepts. We're happy to help. We're happy to help.
Awesome. That's great. I think a lot of people will be happy to hear that. And, now talking about a little bit about, helping a lot of these entrepreneurs, what can they expect, not only in your due diligence process, but what should they prepare for in a due diligence process if they are seriously looking for capital?
Well, in our process, which we're streamlining constantly, we're going to do dozens and dozens of acquisitions of smaller entities. And so we're used to the fact that they mean, for one, have never been through the process before. But what they can expect, as I said, is the purchase of a business is not like the sale of a house, the sale of a business is not like the sale of a house. So that's the first thing we warn people on. That any business, not just cannabis, but any business, it takes time. But we do have a process where we can literally close in 30 days. Because we have a multiple stage or multiple closing process. Because in cannabis, you have the whole regulatory piece. That could be 3 to 6 months, from the time the license transfers. But we have a very streamlined, efficient, and because of our supply chain assets, we can actually close deals in 30 days in a two-step or two-stage process. But to answer your question, get yourself ready, get your financials ready. I know it's painful, but to speed up the process, you get your QuickBooks or whatever you're using, get it fully up to date, have your accountant look at it. And look, there's always going to be challenges and issues, and we understand that, but get it up to date so that it's done. And then we can actually, because we're always looking at the trailing 12 months. So if you say, well, I did my books up until, December 2020, well, great. You better, we can't really engage heavily until those trailing 12 months are done. And sometimes it can be painful because a lot of entrepreneurs, smaller operators, they may do it quarterly, they may do it once a year. But that's, from our standpoint, it's step one. You got to have your books up to date so that we can then transact. Because, as I said, if your books are in order, you're ready to go, and it's a great asset, we can literally close in 30 days.
Excellent. And can you give us some examples of businesses that you've brought on board and kind of how you guys have decided to structure those deals?
Yeah, so, officially went public about 3 weeks ago. So we'll be making our first announcements here within a couple of weeks in those core markets. But generally, with a profitable asset, again, I won't get into specifics of the multiples because that will also be fluid, but it is a portion cash and a big portion stock. So the folks that were participating with us, they're going to have the public company upside. And that's what our mandate is and our model is. And so, look, if they're looking just to exit and walk down the street, well, that's an opportunity, I suppose. But for the most part, the entrepreneurs want to stay in. They're just looking for a little monetization of the hard work that they've done. And we can do that. But the second piece that we're bringing to the table is they can also participate in the upside of the public company. And let me explain what I mean by that. Any asset, a small business asset, is usually worth, and I'm going to use multiples of sales instead of EBITDA because I'll do both. So typically a small business is worth 2 to 4 times EBITDA. In a public company, you're going to be worth multiple times of that, 10, 20, 30 times EBITDA. So that's what they refer to as the private public arbitrage. Public companies do this all the time. They don't even tell small businesses that's what they're doing, but that's the reality check. So we're going to buy businesses at, half to 1 times revenue. And in the public company, it's worth 5 to 10, 15 times revenue. So we structure a deal so that our entrepreneurs can get some of that private public lift. So they're going to get multiple times the value of their business because they're contributing to our overall revenues and overall profitability. And they get a piece of that upside. So it's not just for the existing shareholders, they become a shareholder as well. But they also get to pull cash off the table very healthily.
Excellent. Well, Paul, we really thank you for participating in this investor mandate interview. I don't know if there's any final things or notes that you want to mention right now. Really like to keep these nice and brief so our members can move on right to the next one. But if there's any final notes you want to share, please let us know.
Yeah, well, like I say, we're happy to talk to everybody, even though you may not be in our core markets, is that we're here to help. We're going to expand into the other markets, so we're happy to talk to anybody. But, we will respond in due course. But again, we're very much focused on our three, but we're always happy to talk to other entrepreneurs, especially if there's entrepreneurs that really want to stay in other markets that we're considering. They might potentially be an anchor. And so if that's the case, that might open up the reason why we would jump into one of the other states.
And how should they reach you then?
They can reach me at Paul.
And your website URL for us? Excellent. Make sure to go put your name and email address in there to get a little bit more information on. And Paul, once again, thank you so much.
Thank you,
and we
Andres.
look forward to seeing you in Dallas.
You bet. Take care.